Have you ever wondered if the way you receive your paycheck impacts more than just your take-home pay? It definitely does, especially when it comes to taxes. The key difference between employee and contractor taxes lies in who is responsible for withholding and paying certain taxes to the government. For employees, your employer handles tax withholding and pays half of your Social Security and Medicare taxes. For independent contractors, you are responsible for paying all of your own taxes directly, including the full amount of Social Security and Medicare. This fundamental difference stems from how the Internal Revenue Service views your working relationship with the company you perform services for. An employee, typically receiving a W-2 tax form, has their taxes like federal income tax, state income tax, Social Security, and Medicare automatically deducted from each paycheck. Your employer then matches a portion of your Social Security and Medicare taxes. An independent contractor, on the other hand, receives a Form 1099 for non-employee compensation and is considered self-employed for tax purposes. This means you handle your own tax payments. Understanding your worker classification is crucial. If you are an employee, you do not need to worry about quarterly tax payments for your current job, as your employer manages this. However, if you are an independent contractor, you must proactively set aside money for taxes and make estimated tax payments throughout the year to cover income tax and self-employment taxes. This often means paying taxes for times a year by April 15th, June 15th, September 15th, and January 15th of the following year. Failing to make these payments can lead to penalties. One important concept for contractors is the self-employment tax, which combines your Social Security and Medicare contributions. As a contractor, you pay both the employer and employee portions of these taxes, totaling 15.3% on your net earnings up to a certain income threshold for Social Security. You also get a special deduction for 1/2 of your self-employment tax, which can lower your adjusted gross income. This is a benefit not available to employees. Ultimately, recognizing whether you are an employee or an independent contractor is essential for proper financial planning and tax compliance. Knowing these distinctions allows you to accurately budget for your tax obligations, avoid unexpected tax bills, and take advantage of any applicable deductions, ensuring a smoother tax season and greater peace of mind for your financial future.